Welcome back. I'm Pratap here. Today is the 16th January 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. You might be knowing the cost of the training is over $8,000 and it is a complete free training. You can access all the lessons from our NeoStock homepage. At our homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. Now you can find all the training lessons in this playlist. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time we release a new YouTube video or any other very important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday, end of the day, we identified only one high liquidity zone from daily and 75 minutes time frame. And this is a 75 minutes high liquidity supply zone. This is a drop, two base candles and a drop candle. Have you noticed? This entire zone is violated. When it is violated? During the first minute of 9:15 candle. Okay, why is we have a fine-tuned 5-minute zone? Clearly we are seeing the color differences. We have a 75 inside 15, inside 5-minute zone we have a fine-tuned 5-minute zone. Why it is violated? We know when a zone will be violated. You already learned in lesson 16. When a zone could be violated at least 80% level, our prediction is true. Unless institutions decide, create a new order flow, supply order flow, again push the market down. Except that scenario, remaining scenarios, these fine-tuned zones will be violated. In which circumstances these fine-tuned zones will be violated, you already learned different scenarios in the second video of lesson 16. Excuse me. Okay. So let us revise the concepts you have learned when a zone could be violated. This is one of those scenarios. So we have excellent drop base drop identified by our software, and this 75-minute zone is fine-tuned with 15 minutes time frame. See here we have a rally candle. You have we have a rally candle, 1, 2, 3 base candles and maybe medium size candle and then drop candle. You already learned medium size candle could be part of the base. You may feel maybe this is not a medium, maybe a little bigger. If that is the case, also you know this zone will be violated because there is a rally candle, there is a drop candle, in between no base candles. That means there is no institutional order flow. Easily the zone will be violated. That way you could have predicted. In case if anybody convinced this could be a large candle. Okay, I thought this is a medium size candle. I put it inside. So then I have drawn the 5-minute zone. Look into the 5-minute zone. See, this is a rally candle, a base candle and a drop candle. You might be wondering how it is a rally candle. This is a clearly looking like a base candle. At the hidden body, you already learned in lesson 9. Lesson 9.3 and lesson 9.4. In both the videos you learned hidden body and hidden zones concept. It is a new concept that will make you understand the supply demand zones concepts in a perfect way. See, here we have a rally candle with hidden body. This is a rally candle. Okay, this is a medium size rally candle. Okay, this is a base candle, and then you have a drop candle. That way you can identify this is a fine-tuned 5-minute zone. Now you see you have a drop, now again you have a rally, again you have a drop. This drop candle picked up the orders from this zone. How it picked up? From type 2 proximal, not type 1. Let me draw type 1 proximal. See, this green color candle already consumed the order flow from type 1. Now type 3. If type 3 is type 2. Type 3 mostly we don't consider, rare situations. So type 2 picked up the orders. That means this zone is a tested zone according to our high liquidity zone, fine tuning the zones. Mostly we believe up to type 2 proximal. If it is a fresh, at least 80% scenarios, the zone will work type 2 proximal. So that is also tested in this candle. So that way this zone is no more fresh for us. And we know this zone will be violated because there is no fresh fine-tuned 5-minute zone at type 2 proximal level. If type 1 and type 2 proximal are almost very close, at the time we want to look for both type 1 and type 2. But here some distance is there, considerable distance. See, type 1 consumed the orders from type 1. Some sufficient distance we have drawn. Even we can consider type 2. If anybody took a trade in this candle, they would have got a good profit on that day. But anyway, finding such kind of zones is possible only in the live market when you are observing the charts. Live market you have to draw the zones. Live market you have to identify such kind of order flows are having strong institutional order flows. When you do such a great big analysis only, you will quickly able to take a decision. All these things happened while creating the zone. A zone is created, immediately after that it picked up the orders from the zone and came down. If this is the high liquidity zone, it could have been worked. But if you want to predict high liquidity zone manually, computer wise it's different. The algorithm is totally different. But manually if you want to identify, you can't identify the fresh zones easily. You have to do some waiting, multiple tests, at least it should testing from the zone and rejecting some price action close altogether. Only you can able to predict. So today easily the zone is violated. We predicted this zone will be violated because it is not having fresh fine-tuned 5-minute zone. This is one of the concepts when a zone can be violated. Or no 5 minutes order flows, or there is no 15 minutes fine-tuned zone. In all these situations, you know zone can be violated. So that is what. Go to 1 minute time frame, easily you understand. See, this is morning 1 minute candle. Entire order flow is gone. Even if somebody thought, maybe let me try because there is a risk, some enough order flow is there, maybe let me try second time, or let me take a trade at type 3 proximal. Even if you think like that, you would not have got this opportunity because in the morning 9:15 immediately soon after market started, quickly it violated. But anyway, we should be very happy because the concepts you learned when a zone can be violated, that happened here. So we should feel happy that our concepts are working perfectly. Maybe you might be having unhappy because today you didn't get any trade opportunity in high liquidity zones. That's why yesterday in the HLQ analysis video, I commented you guys, look for short-term trade opportunities or WIT opportunities. Intraday traders, within that you can plan the trades. Because anyway they are supporting bullish and bearish trade setups. They are as per the trend. But if you are an intraday trader, even though you take a DIT trade or WIT trade, you will exit. Mostly high liquidity zones, any of the zones, you can at least you can plan. I also suggested you look into low priority high liquidity zones. the TCO or TCZ. But I also warned you, the success rate is not 80%. When nothing is there, something is better than nothing. For looking for, at least we have to, if you want to get profit, some risk we have to take. If not 80% success rate, at least we look into 60% success rates related scenarios. Luckily, if it works, okay, we got a good profit on that day. Otherwise, our loss will be very small. The biggest advantage you have seen 4 days back, that is last Monday. All the zones are gone. But all the zones are gone. That's a good lesson for us. Does it really hurt our profit levels? No. The reason? The losses are with less than 2%. And majority of the stocks are like 0.8%, 0.9% or 1.2%. That's it. Sometimes market is bad, but still our risk management concepts land in supply demand zones are protecting our capital. Maybe you may get small loss, minimal loss. Next time when you get the profit, compare it to that profit, whatever the loss you got earlier for your stopped out trade, you feel like that is nothing, just nothing. So that is the advantage with supply demand zone concepts, because the risk management is integrated with this concept. If you look into the indicators and all, risk management is not integrated with one indicator. You have to use different indicators. One indicator for taking the trade entry, another indicator for identifying the target, another indicator for identifying the stop loss. And all these concepts are built based on different theories. They may not be having any relationships among those theories, but still we are trying to integrate all the theories. Non-related things you are trying to correlate. According to the statistics, when you correlate non-related things, mostly they fail. But today we didn't have such kind of concepts. We have a well-defined concept, a price action based concept in our technical analysis. And that is having everything. You can identify the entry, you can identify the stop loss, you can identify the target, even you can identify RR, risk reward. Everything is there in one concept. So this is the advantage of our supply demand zone price action. So within these concepts, lesson 16, we identified a new concept when a zone can be violated. 80% scenarios, what could be the possibilities? All those things we evaluated. And today, that concept perfectly worked for MFSL. So this is about HLQ zone analysis. Hope this information will be useful to you. It's like a revision too. For the people who are already having good knowledge about when a zone can be violated, it is going to be a revision for you. And those who recently completed the courses and practicing, this video is a good example to explain lesson 16 concept. Okay, this is about today's video. Hope this information is useful to you. Let's all meet again in our next video. Thank you.